This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, May 11th, 2016. Euro dollar. So the euro is now at an interesting point as we've recently pulled back from the 2016 high at 116.17 and traded back down into the middle of a range between that 116.17 high and some critical support at 112.17 lower down. So right now it's difficult to determine whether the market's going to put in a higher low and head back towards 116.17, ultimately towards that critical August 2015 peak at 117.09 further up, or if the market is really looking to stall out by this critical medium-term resistance up towards 117 ahead of a more meaningful bearish resumption. So it's best to stand by and wait to see how this plays out with the market in the middle of the range. A break back below 112.17 would do a good job of confirming some topping and accelerating declines, while ultimately inability to do so does leave the door open for the possibility of additional euro upside over the coming sessions. Sterling dollar. So cable has recently pulled back after stalling out above some key medium-term resistance at 146.70, and while the market holds below that level, the pressure does remain on the downside. But if we do see a break back above 146.70 and then above that high that we saw from the previous week at 147.70, this would do a good job of taking the pressure off the downside and suggesting that the pound is putting in a more meaningful base. Dollar yen. So dollar yen is pulled back after correcting out from those recent multi-month lows at 105.55 all the way up to as high as about 109.37 on Wednesday. But again, at this point, the overall downtrend here remains intact, and the market is looking for a lower top ahead of what should be the next downside extension below that recent low at 105.55 and potentially down towards parity further down. At this point, we need to see a break back above 111.89 to take the immediate pressure off the downside. Euro Swiss. So this recent break in Euro Swiss above some key resistance in the 110 to 110.65 area is significant as it opens the door for the next upside extension towards a retest of the multi-month highs at 112 further up. At this point, any setback should be very well supported down towards the 109 area, while only back below 108 would compromise the constructive outlook for Euro Swiss. Aussie dollar. So Aussie is deferred to some consolidation after recently taking out some key moving average support in the form of the 100-day moving average, but ultimately this breakdown below the 100-day moving average does set the stage and open the door for the possibility of additional weakness over the coming sessions. Look for any rallies from here to now be well capped towards 76, with deeper setbacks potentially poised for a move down towards the 70 area. Dollar CAD. So dollar CAD is showing signs of finally basing out in recent trade after putting in a multi-month low just below 125 at 124.61. At this point, look for the market to establish back above 130, which would open the door for an acceleration towards next key resistance at 132.20 further up. Inability, however, to establish above 130 could put the pressure back on the downside, exposing a retest of 124.61. Kiwi dollar. So Kiwi has done a good job pulling back after once again being very well capped into resistance in the 70 area. Certainly the market has been well capped ahead of 71, and this latest pullback suggests and opened the door for the possibility of deeper setbacks in the sessions ahead below that recent support at 67.59, which was broken, and towards 65.46 further down. At this point, any rally should be very well capped up towards the 69 area. SPX 500. So despite a little bit of a bounce in recent trade, overall it looks like the market's wanting to top out above 2100 again in 2016, with deeper setbacks expected, but a breakback below some key support at 2021 will be required to strengthen this outlook and accelerate declines, exposing a retest of that 2016 low at 1808 further down. Ultimately, only back above 2112 would really delay this outlook. Gold. So gold has pulled back in recent trade after stalling just shy of the 2015 peak at 1307, though ultimately any setbacks continue to be very well supported, and this market is eventually expected to break above 1307 and head towards 1400 further up. At this point, any setback should be supported, with only a break back below 1191, 1190, that previous resistance now turns support, to ultimately compromise this bullish outlook for gold.